All right. Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. So if you guys were expecting me to come on at 8:30 and talking about my trades, well, I'm going to start coming in when I find a trade and pop in here unannounced. So make sure that you guys are subscribing and hitting the little bell right next to that subscribe button, because that's what gives you the notifications when I pop in to talk about trades that I'm finding in the market. So I want to get that to you as quickly as possible. That's why I'm going to be doing these unannounced, folks. And smash that like button throughout this video. If you find something that you think is useful to you in your daily trading regimen, please smash that like button, because it feeds those bots that runs out and finds somebody to share this video with. Also, if you want me to comment on something, right over there in the comment section, please comment throughout this video on anything you want me to cover, or if you want me to clarify something, I'll be happy to make sure that you guys are clear of concept before you get going. All right, so without further ado, let's get on with the economic data, because that's what I do, talk about the economic data, see how that's impacting the overall markets, and then wrap it up with some trades that I'm looking at. All right, so economic data is going to be kind of light this week. We do later on, I think Wednesday, get some durable goods, personal spending here in the United States. But for the most part, it is a Monday and nothing really to talk about today and tomorrow for economic data. So we're going to just be waiting to see what comes out geopolitically to drive these markets. Right now, it is all about Apple, iOS, and their new privacy settings. That's impacting social media across the board. We saw Snap come out and talk about how that was impacting them. It's bringing down just about everybody in that space, whether it's Facebook, Pinterest, or anybody else that is social media. Even Google and Amazon are going to suffer, because think about it, folks. If you are advertising and you're using that data, all of a sudden they're not giving you that robust data anymore. Well, that's going to impact you going forward, especially during a time where we are looking to have advertising going on and driving some of these markets or some of these folks heading into a holiday season. All right, so let's talk about the overall markets, because there's not a whole lot of economic data to even speak of. But across, we got bonds. You know, they made that move to the upside yesterday, or Friday, I should say. And I was talking about this. I don't really see us having really high interest rates anytime soon. They're going to be trying to play this whole thing. Is inflation transitory, or is it here to stay? Well, we had Janet Yellen come out and talk about just that. She said inflation is not just transitory. It's going to be here a little bit longer than what was considered transitory, but not here forever. Well, we'll have to see. We are already starting to see some of these shipping costs come down from China, as that is really one of these drivers of inflation right now, folks. Not going to see any type of discounts at the toy stores or anything like that. As a matter of fact, I have a friend that said I have a friend that's in shipping, and he said that basically Mattel and some other manufacturers are actually flying the toys in this year and not doing the shipping routes. So not going to see any type of cost cutting there, because the margins are going to be already cut for the companies. So they're not going to pass any type of savings on to folks like you and I. All right, so I do expect bonds to hold on to this area right in and around this, maybe even move up into the 160 handle, just a little shy of that right now. Gold, I do expect to continue to move higher and stay into this 1800 handle here, folks. Inflation here to stay. Well, that's going to drive dollar-denominated commodities. That's why we're seeing crude oil make that move to the upside, and gold. And probably another reason why we're seeing Bitcoin make that move to the upside is as people and folks are looking at fiat currencies and the deflationary aspect that printing money happens or does. Well, that is going to drive things like Bitcoin higher. I was expecting folks to see Ether make these incremental moves higher before Bitcoin. Well, not necessarily before, but in tandem with that. But I thought that we would see Ether actually outpace Bitcoin here. VIX is just off a little bit. We are seeing some equities move to the upside, but they are struggling off the highs. I think that we're going to see the tech sector a little bit more weak heading into this earnings season. We've got a ton of earnings this week, and it's going to really be what determines our directional moves in the overall markets, because we don't have a whole lot of real economic data that's going to drive these markets. And having said that, what we're going to see is these earnings make these moves. And I think that we're going to see the tech sector earnings really kind of wane a little bit. There was so much momentum behind those folks during the pandemic. I think that some folks are going to be looking at these earnings, despite the fact that they might beat. They're going to be looking at forward guidance and the things that they talk about, these headwinds of the Apple iOS data hurting their advertising. I think that's going to be what we really see these guys focus on in their earnings calls. In the S&Ps are making a move to the upside here again, but a struggle off of the open. We're seeing this time and time again, as well, one of the things over the weekend was China and Russia were performing joint military patrols in the Pacific. Now that's going to raise some eyebrows, folks, as that was the first time ever. And, we do have a line between us and Russia where we have some fishermen that believe our line is a little bit further to the west, and Russia thinks their line is a little bit further to the east. So there is a line there out in the ocean that folks believe is a bone of contention, and that could be something that gets elevated here with these folks performing joint patrols. So if I was an Alaskan fisherman, I would be more nervous than anybody else. Here's what we were talking about with the broader markets and the social media folks showing a little bit of weakness. Actually, Facebook making that move to the upside as the day progresses. You can see Amazon being affected by it as well. One thing that I was looking at, and it's not involved in this market whatsoever, but I was looking for, there's Facebook. I wanted to see Pepsi right here, because I want to talk about this trade that I put on, and it was based on this pattern setup. You see in these webinars where I'm talking about different types of candles to look for topping patterns and bottoming patterns. And this is a typical candle that we would look for at the top of a move. Similar right here. It's a red candle, a green candle. Now this one didn't really get confirmed. It tested that, but we would have needed to see a settlement below that previous day's low there. And with this one, we've gotten it below that wick on the 20th, the 21st. You can see confirmation Friday, a little bit of consolidation here, but it looks to me like we could see some continuation down to the 50-day simple moving average. Now, with that said, I'm looking at really low implied volatility. If I have low implied volatility, what does that really mean? It means that I know for at least Pepsi, that these Pepsi implied volatility being this low, that the premiums over in the options are very cheap. So that leads us to believing that we need to be buying options. If I'm buying options, I need to limit theta decay. We talk about it in these webinars that if I'm going to try and limit theta decay, that I want to go further out in time. That's where we see that limited theta decay. And if volatility were to expand, that affects those further duration options a little bit more. So trying to turn the levels or turn the tables into my favor by implementing an option strategy at the onset that sets me up for success. And I try to create guidelines for you folks in order to follow those same guidelines in order so that you aren't second guessing yourself on what type of strategy you should be implementing. So we go through all of that in those webinars. So please check those out, because I just don't have the time to dig into the devil of the details. So if you want to check those webinars out, make sure you're subscribing and hitting that bell so that you get a notification when I pop in here and do one of those webinars. All right. And smash the like button. If any of this is sending off a light bulb that helps you out, share that with somebody else as well. So we can see that we have low implied volatility. Therefore, we know over in the options that our premiums are super cheap. So therefore, I want to buy low, sell high, right? I'm going to go into the further duration option. So that takes me out to the January. I talk in those webinars outside of 70 days to expiration. And going to the 36-ish delta that we talk about, I was buying the 155 puts in there for $3.35. Right now, it looks like it's 35 bid at 45 right now. So got it on that bid. As soon as I hit it, I popped in here to let you guys know that we are right in and around that area where I'm getting filled on my option strategy. So let's go through this a little bit more. If you are the buyer of an option, that gives you the right but not the obligation to sell this stock at the price. Well, therefore, if the underlying starts going down, I know that my options have to include the benefit. That means any option that goes in the money, I have to be paid off for where I could sell it at my strike price and the current price. Okay, so that is the benefit of being able to own a long put. Gives me the right but not the obligation to sell the stock at a certain level. So 155, I have the right but not the obligation to sell the stock at 155. I'm not going to do it today, but if I see Pepsi go down to 130, then I know that when my 155 calls have to include the benefit from where I could sell it and where the market currently is. In this scenario that I'm talking about, if the market dropped to 130, it would have to include the benefit from 155 to 130. That's $25, right? So it would have to at least be worth that much, all right? So I can take advantage of that. I'm going to look for a quick move right down to the 155 strike. That's the value area high that lines up with the 50-day moving average. And I've beaten the probabilities. If I can get a quick move down there to 155, I will be profitable and try to cover this trade. So that's what I talk about in these videos. We're beating the probabilities, strike location, all of those things in order to try and turn those tables of probabilities in our favor. If any of this has helped you out, please make sure you are liking that down there by smashing that like button. Comment. If you're watching this on tape delay, I will circle back around, make sure everybody's clear of concept. And please make sure you folks are subscribing and hitting that bell, because we're going to even be doing some fun things where I'm going to be interviewing some traders. So if you guys have an influencer that's a trader that you would like me to talk to and maybe see what their best practices are in their trading days, throw it over there in the comment section. I'm going to circle back around. Like I said, I'll take your guys' suggestions into serious thought. All right, that's about it. That's all I got for you guys, other than if you can't take that, take it easy.